Do you want to learn how you can invest in real estate without doing any work and without being a landlord? Well, you can do that with syndications and funds. So in this video, I'm going to talk about what syndications and funds are, how you can invest in them passively so you can get all the great returns from real estate without doing any work, and I'm also going to talk about how much you can make with these investments in general. Hey guys, I'm Ariane and I retired with passive income at the age of 27, and I made this channel to help other people like you learn how to build wealth and create financial freedom and time freedom for themselves as well. So in this video, we're going to talk about the most passive way to invest in real estate. A lot of people shy away from real estate because they think you need to be a landlord and it takes too much work. Well, that's probably because they don't know about these things called syndications and funds. Here's the short version of how investing in a syndication or fund can go. First step, you choose your investment. Step 2, you sign the documents. Step 3, you send in the money, you wire it in. And then step 4, you sit back and collect your money. So, pretty simple, right? So as you collect those monthly or quarterly distributions, you usually also get some updates about the properties. You're gonna read the property reports and see and make sure that everything's going well. But it's as simple as that. There are some other details, like once a year, you're going to get sent a tax return document called a K-1, and you're going to send that to your CPA. And then usually, when it's closer to your year 5, the deal usually sells, and when the property sells, you receive your capital back, plus any extra money from the sale. Now, sometimes in between year 1 and year 5, there's also a refinance, so you would also receive your portion of the capital back then as well. So it's like owning real estate where you have all the benefits of cash flow and refinances and sales, but you don't have to deal with all the hassle involved. That's it. So as you can see, it's as hands-off as you can get. You don't need to look at 100 properties and make 100 offers to win one deal. You don't need to talk and manage property managers. You don't even need to manage any renovations or any of the other things you don't like about owning rental properties. So you might be asking, well, how is this possible? It sounds too good to be true. Well, let's talk about how these deals are structured. At a high level, all a syndication or fund is a partnership. It's a partnership between two types of partners. So the first type of partner is something called a general partner. So these are the active people in the deal. Then the second type of partner is something called the limited partners. These are the people who put in the money. So limited partner, they put money in the deal and they get to enjoy all of their returns alongside the general partners. And the general partners do the work, right? Now, most of the times, the general partners also put money in the deal, so they actually are general partners and limited partners. And then FYI, we'll talk about this more in a different video, but typically the general partners get 30% of the equity, and then the limited partners get 70% of the equity, or the lion's share of the equity and the lion's share of the returns. We'll talk about more of that in a separate video, but I just wanted to kind of highlight that right now. So again, like we said, the general partners are the people who actively do all the work. They find the deals, they make the offers, they manage the property manager, they deal with the financing and all that. Limited partners are people who just put in the money, sit back, and enjoy the returns without doing any of the work. The general partners are typically people who have chosen real estate as their primary career or business, so this is active income for them. This is a job and a business for them. This is not passive income. Now, for the limited partners who just send in the money, then this is as passive as it can get. Syndication, I know we talked about syndications and funds, so the difference between those two things is this. A syndication is usually an investment in one specific deal that is selected before you invest. So it might be 123 Main Street apartment complex. So you know you're investing in 123 Main Street. Whereas a fund is usually an investment spread out across different deals with a target criteria, but you usually invest in the fund before they buy all the deals they're gonna buy. So if they say that, hey, we're gonna buy 5 deals all in Florida, all that have these criterias in a good neighborhood, things like that, then when you invest in the fund, they might not have identified all of the 5 buildings yet. They might have only identified one. So the pro with the fund is you kind of get that diversification, whereas the pro in a syndication is you get to invest specifically in one specific deal that you might feel very comfortable with. So now the next question you might have is, what returns can I get? Right? I kind of talked about the equity split earlier, but to you, you might be like, well, I don't care what the equity split is. Just tell me how much money I'm going to get for what I invest in. So that's what we're going to talk about now. But first, I need to have a disclaimer, right? These returns will vary from different deals, areas of the country, different types of real estate, because we mainly invest in multifamily syndications and funds, but there might be mobile homes and office and all that, those kind of syndications and funds. These returns can also vary based on how the general partner for the deal you're looking at structured the deal. So I'm going to give a very general, simplistic example just to help you see the math, but obviously it's going to be different from deal to deal. So like, don't quote me and say every single deal should be like this. It won't. All right, so let's talk about what the returns look like in general. In general, you're usually going to average between a 15 to 20% average annual return. And that's over a 5-year period. And that's usually split up between the cash flow that you get throughout the years and the profit on the sale. So I tend to categorize syndications and fund types into 2 general types, right? So I like calling some cash flow deals. So this is the first type. Some are sale deals. And so the difference between these two is with cash flow deals, you usually get a good chunk of your overall return throughout your ownership in cash flow. So your cash flow per year is going to be around 7 to 10%. And then the money you make from the sale, usually in year 5, is going to be between 5 to 10%. So let's write down a typical cash flow deal example, right? So let's say you invest 100K, and then you get, so let's say year 1, 2, 3, 4, 5, you get $10,000 for the 100K in year 1, another $10,000 here, 10K, 10K, 10K for 5 years, right? So you total 50K. And then on the sale, usually you make another 50K, right? So your total return over 5 years is 100K. Plus, obviously, you get the 100K you invested back because the property sold. So now you doubled your money in 5 years. So that was a sample cash flow deal. Now for sale type deals, you might get a smaller amount of cash flow. So you might get 0 to 5% a year in cash flow, but on the sale, you might get a bigger chunk, like 75 to 100% return just on the sale in year 5. So here's an example so we can visualize it, right? So let's say that for years 1 to 5, so let's write that down again. Year 1, 2, 3, 4, 5, you would get $3,000 a year. So you get 3K, 3K, 3K. So this is your cash flow. As you can see, it's low. But then at the sale, you get an extra 85K in year 5. So this totals 15K. This totals 85K. If we add them up, you get $100,000. So as you can see, both of them give you the same return in 5 years, but with the cash flow model, you got the returns, you get more cash flow up front, whereas on the sale model, you get more of it on the back end. So that's why it's really important to know what kind of investment you're investing in, because it has to make sense for your situation, right? If you're using this particular investment and you want to live off the cash flow for the next few years, then you better pick a cash flow type deal, because otherwise you're going to be disappointed because you actually can't, you're not going to be able to spend much of the cash flow in the sale type model. Now, if you're investing in a solo 401k or another retirement account and you don't need the money in the next 5 years, then maybe you'll be better off with the sale deals, because sometimes they do have a bigger upside on the back end. The thing is, you just need to make sure you know what you're investing for, like what your goals are, and you need to invest in something that aligns with your goals. There's obviously a lot more to this, like how these deals are structured. We kind of touched on that a little bit. How do you find these general partners to invest with? And how do you know that they're legit? So I'm going to talk about that in my next video. So make sure you click that subscribe button so you'll be notified when I post it. Also, comment below with what specific details you want me to cover, and I will do my best to cover them. And for those of you who want one-on-one help with us, we have an application-only program called Wealth Accelerator, where we help people learn the ins and outs of these investment vehicles so they can retire in just 1 to 3 years. So this is a very exclusive one-on-one program with us. So you want to go to wealthgym.com to learn more about that. We also have a free Facebook group called Faster Financial Freedom, where you can learn more about real estate investing, passive income, and growing wealth. There's going to be a link on that in the description below, so check that out. And if you're on Instagram, follow me at @thearianlemire. I would love to connect with you there. All right, thanks for listening, guys. I hope you have an amazing day, and I'll see you at the next video.